I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is September 2nd. It's a Wednesday. We had ethanol production numbers out today, but before we get into that, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 1 3/4 cents, soybeans down 1 1/4, and wheat in Chicago here trading down 6 3/4 cents on the day. Out today in terms of news, we did get Egypt's gas issuing a tender for 55 to 60,000 metric tons of wheat. Also, keep in mind on your calendars, September WASDE report is going to be released next Friday, and then that following Tuesday we will be having the NOPA crush numbers for the month of August. Also, FC Stone on Friday at 3:30 p.m. issued their yield estimates here for corn and soybeans. Basically, their latest forecast was for corn at 165.9 bushels per acre. That's 165.5. That's up from 165 bushels per acre. And then for soybeans, it was 45.4 bushels per acre. That was up from their 45 bushel per acre estimate last month. When you look at how this compares to the USDA, both of these numbers are shy of current USDA expectations. USDA is currently pegging yields for corn right at 168.8 bushels per acre, and then USDA is pegging soybean yields at 46.9 bushels per acre. Now, let's talk a little bit about the charts. You'll notice that today we did trade lower here throughout the better part of the day, but we're able to come back to kind of erase most of the losses that we saw early on. I think the big thing right here for this November soybean chart is the fact that we had resistance up there around 8.90, and I wouldn't be surprised if we continue to trend lower, possibly breaking new lows here in the coming weeks. But do keep in mind that we are getting toward the time period when harvesters are going to start rolling in the southern part of the country. We're going to start getting yield numbers out, and those yield numbers have the potential to either surprise the market one way or another. So do be cautious as we move into the middle part of September and we start getting yield numbers from the fields. But in the short term, immediately, I think we are still trading weather. Weather continues to be relatively positive, except for some dry conditions in the eastern part of the grain belt, and that coupled with some of that heat, that could have some negative impacts on the corn filling time period. It could have some negative impacts on the potential for yield. But in general, I do think across the U.S. the precipitation outlook is adequate enough here to most likely continue pushing grain prices lower. When you look at December corn daily chart, you'll notice that 365 is support. It acted as support again today. We rallied back from falling below that. You'll notice that we tested this back in May. We tested it back in June. We tested it early August and again mid-August. And today we tested it again. We were unable to close below it, but I do think if we do close below it, this could open up a little bit more of a price slide here as we move into harvest. So I think that is a critical price level that producers should be paying attention to. Let's just see how prices react when we try and test that out again tomorrow. Keep in mind, ethanol production was released out today. We did see a 4,000 barrel per day decline in ethanol production. That brings us to 948,000 barrels per day produced. So that was still very strong. 87,000 barrels per day over the 4-year moving average, and 27,000 barrels per day over last week during the same time of the year, or excuse me, last year during the same week in the marketing year. So we are declining. When you look at coming down from just a month ago, production is declining, but this is seasonal. This is very typical, and we are still well above last year's levels and well above the 4-year moving average. So we continue to be strong. On average, we are up about 4% in terms of production year over year. When you look at export sales expectations, keep in mind that they will be released out. This report will be released out tomorrow early on in the day. We'll be writing about it in our morning commentary. But expectations for this export sales report is for corn old crop sales to be between 0 to 200,000 metric tons, soybeans to be between cancellations of 150,000 metric tons and actual sales of 50,000, and wheat between 250 and 500,000 metric tons sold. You'll notice last week we did have cancellations of 131,000 metric tons of corn, 131,000 metric tons of soybeans for the old crop. So I wouldn't be surprised to get more cancellations in this week as well. However, prices have slid, and so perhaps maybe we'll be able to beat expectations, but it seems like for the most part they're switching from old crop to new crop sales. As new crop sales last week were absolutely outstanding, beating analysts' expectations, especially for corn, which ranged between 500 and 700,000 metric tons, and soybeans here, analysts' expectations range between 700 and 900,000 metric tons. Last week we got 1.4 million metric tons, so very strong export sales last week. We saw a number of reportable sales, about 3 of them announced last week, so we should be getting another strong week of export sales for soybeans, and that's good because we're about 73% booked compared to what we typically book during this time of the year. When you look at the 4-year moving average, we're about 73% of that. So we have a ways to go to catch up. Hopefully we see strong export sales for new crop tomorrow. Guys, that wraps up today's show. If you have any questions about what we talked about, please give the office a call. The number is 877-472-4607. If you haven't done so already, take a demo of our 14-day free trial. See what it's like to have live quotes in the palm of your hand as we enter harvest. It's a great platform for you producers out there that are looking to take advantage of market moves during the middle of the trading day when you don't necessarily or you wouldn't have had access. Now you can view these live quotes. You can be able to take advantage of opportunities if the price were to spike higher. We also have basis alerts, we have basis emails that get sent out nightly. They calculate your best selling opportunity in the cash market, taking into account your trucking and storage costs. So these are all features that you would get here at GrainHedge if you had a trading account, and I look forward to talking to you about them a little bit more personally. So please do give the office a call, 877-472-4607. Thanks a lot for tuning in. We'll see you here Thursday for the Export Sales Report.